And without further ado, we'll also move into our next panel, which will be focused on disrupting transport and logistics. And about $500 million have been invested in logistics and transport companies in just the last 3 years in MENA. And as consumers basically continue to expect to move seamlessly from one place to the next and to have basically everything delivered to their doorstep, we certainly expect to see the trend and increase in investment in transport and logistics to continue. So this panel will explore that sector with Ali Halabi, CEO and founder of Voltlines, Gaurav Biswas, CEO and founder of Trucker, Hassan Hallas, the CEO and founder of Lyve, and Mohammad AlRazaz, CEO and founder of Auto, moderated by Ankit Sarwahi, managing partner at MEVP. Prior to MEVP, Ankit was a VP at Boson Ventures, and I welcome you all to the stage for the session. Welcome.
Good afternoon, everyone. Good afternoon, everyone.
Yes.
Let's get this started without any further ado, because as we know, deadlines move the world, and I don't think if anybody appreciates that better than the 4 gentlemen on stage today. Mohammad, Hassan, Gaurav, Ali, thank you for being with us. I guess we know your names, but let's start with a round of quick introductions. If that's okay, tell us a little bit about yourself and what you do and how you got here.
Hi, everyone. Thanks for having me. Thank you, Ankit. Working? Yeah. So my name is Ali Halabi. I'm the founder and CEO of Voltlines. Voltlines is a mass transit corporate mobility company. So we focus on shared mobility. We're based in Turkey, Istanbul, with operations in 3 Turkish cities, the biggest 3 Turkish cities. We just set up shop in Abu Dhabi in preparations for MENA expansions. So right now I'm commuting between the 2 cities. We started in 2018, and we've been growing ever since, despite the pandemic. We mostly move corporate people. So I'll tell you more about that in a bit.
Ahlan wa sahlan to the stage and to Abu Dhabi. Gaurav?
Hi guys, so my name is Gaurav Biswas. I'm the founder and CEO of Trucker. Trucker is the region's largest truck aggregator in the B2B, full truckload space. We move about 1,200 trucks per day. We are about 4.5 years old across 8 countries, including Turkey. And we're aggregating about 40,000 trucks owned by small transporters or majorly by individual owner operators. And we service about 600 plus B2B clients, including the biggest ceramic producer, the biggest steel producer, the biggest petrochemical companies. And we right now move cargo across 12 countries, everything from Sudan to, 2 weeks back, we moved cargo from Turkey to Moscow. And me as a person, before Trucker, I've had 12 years of real estate transaction advisory experience. Worked across London, Dubai, and Los Angeles. And Trucker happened by chance. I wasn't looking to get into a tech-based business. 2015, 16, my dad started falling sick. I'm the only child. There was pressure to stop the expat life and move back to India on the family business. And that's when, by chance, I come across the transportation sector. And the single biggest thing that, motivated me to get into this was the fragmentation of the supply. So if you see out of 100 trucks in the market, and if you, aggregate the big transportation companies who own 500 trucks or more, they are less than 3% of the market. And this is pretty much standard across the world. So that's one major reason for me to get into Trucker.
Oh, thank you for taking that chance, Gaurav. Hassan?
Thank you for having me. So my name is Hassan Hallas. I'm the CEO and co-founder of Lyve Global. I've been all my life a serial entrepreneur. So Lyve literally is my number 8. Raised hundreds of millions of dollars and did multiple exits in Southeast Asia and USA. So Lyve basically, it's a last mile delivery platform that connects every single stakeholder in the delivery journey, all the way from the driver until the customer. We started the story in 2016 with 50 drivers. Today we are in 15 countries, managing hundreds of millions of orders and billions of GMV.
Am I audible? Yes, we are. Thank you, Hassan. Mohammad?
Hello, so hello. All right, so my name is Mohammad AlRazaz. I am the CEO and the co-founder of Auto. Auto basically is an all-in-one shipping management software or shipping gateway where we help e-commerce businesses and omni-channel retailers to ship, manage, track, and return their online orders with more than 100 plus shipping carriers across MENA from one consolidated dashboard. So we started the company on the mission of answering the tricky question of why when we order a pizza from Domino's, we get it delivered in 45 minutes, made from scratch, but when we order a shirt from Zara, it takes like 3 to 4 days to have it delivered to your door. So that's basically Auto and the mission we're trying to achieve.
Thank you for bringing our pizzas faster. They couldn't come any faster, by the way. Gaurav, I want to start with you. You said 12 countries?
So we are live across 8 countries, but we are moving cargo into 12
8
countries.
countries, all these cargoes. I guess the only question I want to ask you, and I'm sure the audience also, is how was lockdown?
Say that again.
How was lockdown?
So COVID, I think, was until last year, or until before it happened, was a black swan kind of an event. So for us, the single biggest learning from COVID was that this is not going to be a black swan event anymore. I think we all need to be prepared for this to constantly keep happening, and people's personal lives and business lives have to be devised to work around it. So for us, it was the second quarter 2020, which was pretty much the panic quarter in the region. I think the first quarter was a panic quarter in China, where things shut down. Trucker revenues fell down from 100 to 55, and drivers were nervous about going out. Factories were shut down. But then we saw a very typical V-shaped recovery. Like July revenues were equal to March, and then August onwards we were back on the same growth trajectory. But some of the things that we, at that time as a startup and to a technology-based business, is your job to ensure that every time there's an obstacle, COVID or anything like COVID, you need to be faster than everybody else to achieve your business objective, which is moving cargo from A to B. So we created new business models. We were doing cross-docking at the borders, where it's all domestic runs, so cargoes were not crossing countries. But we were we were the first company that digitized the entire appointment system at the UAE-Saudi border, along with Tabadul, which is the digital arm of the Saudi customs. So a lot of these things, and being in transportation, there are very few like us, the guys here, who are looking at transportation, not just moving cargo, but constantly wanting to make it more efficient, digitized, and all of that. So we have a huge, competitive advantage compared to a 30-year old transportation company with 5,000 trucks. We still beat them any day, So we did a lot of those kind of hustle during that time.
Thanks. Very interesting, especially the fact that the government was so forthcoming in wanting to work with you. That's very refreshing. Ali, I want to pose the same question to you, brother, because I'm sure you must have been through that terrible time as well.
Just to explain a bit first what Voltlines does.
Go for it.
Just so that the intensity of COVID is clear for us. Basically, what we do is we're building a transportation network that sits as an alternative between public transport. So we're a shared mobility company, right? So the network that we're building sits between public transportation, which is the ultimate shared mobility platform, and taxis and car ownership. So we're right in the middle. We use 16-seater buses. And together with technology, we create express commute lines between residential areas and business areas, right? And our business model in Turkey, our go-to-market strategy is purely B2B. So we only work with corporate customers, right? So you can imagine when COVID hit, everybody went to work from home, and in the span of literally 2 weeks, 90% of our operations froze, right? So that was a huge shock in the system. And I say it threw us out of our comfort zone, not that growing the company before that was a comfort zone, but it really put us on the edge. And despite the fact that 90% of the operations stopped, we started adding a lot more customers during the same period of essential services. And so we kept the essential services going by quickly adapting. This is one. Two, despite stopping operations, we continued receiving payments from our corporate customers, at least a portion of that, because there's a contractual commitment that is in place. And
so the cash registers were still ringing.
So we basically waived the gas, we waived the vehicle usage, but we kept the driver fees, and we kept paying the drivers despite them not being not working, because we wanted to protect drivers, because just like letting go of drivers the minute crisis hits didn't feel ethically right, and we really pushed companies to do that. Companies didn't want to pay at first. So in hindsight, right now, when we look back at COVID, first of all, the first wave was a 64% drop in revenue, and then we recovered most of it. And then there was a second wave in Turkey back in November, December. We had a 42% drop in revenue, and then we recovered most of it. And then the third wave was in April, May, right before the vaccine.
I'm just glad you've kept count of these waves.
In that, we dropped only 15%, by the way. And then we have more than doubled our pre-COVID numbers right now. But COVID wasn't all, yes, it was tough, but it helped us even innovate at a faster rate, because we built a new product line during COVID called DRT, which is Demand Responsive Transportation. The way Voltlines works is that companies, instead of renting vehicles from bus operators, they buy a monthly subscription per employee. And that's a subscription that gives them access for daily commute every day. But during the pandemic, we built DRT, which allows you to buy a kind of like a cheaper subscription, but it's actually a pay-as-you-go subscription. So you buy access, and then you pay as you go. So it's a booking system where you book to the network. And today, that business is 30% of our business.
Wow.
So it just shows you that, in the new reality where companies are not going to be working every day in the office, there's going to be hybrid work. Voltlines now is a more needed solution for all the companies that offer commute as a benefit.
What a brilliant story. Hassan, Mohammad, while Gaurav and Ali were dealing with this sudden screeching halt, I guess you guys were having a lot of fun, weren't you, Hassan?
Good for you, huh?
I mean, COVID was, while it was definitely a hit for a lot of businesses, it was a blessing for us. Maybe it's important to shed some light how we started our story, and we've been building vertical after vertical, or product after product. So we started, myself and my co-founder, in 2016 to solve the physical logistic issue, where most of the big players, they have fixed assets, where driver, depreciation, visa, etc. Then we were able to build that digital platform where you get the driver whenever you have an order and you pay as you go. And then quickly we realized if we want to do that, we cannot grow or keep the growth exponentially. And that's where we start building our SaaS platform to digitize businesses, whether they are in grocery or food or F&B or courier. Then we took it all the way to different countries, signed a global deal with big enterprise businesses. And that's where we realized that the fintech element as well, it's a huge. We have literally this year more than $1.3 billion swimming in our ecosystem. So now the way that we're building the spectrum all the way from logistics, SaaS, globally, we are already in 15 countries, planning to be in 100 countries in the coming 18 months. So that's where the fintech element as well, it's extremely important to complete the ecosystem. So one big challenge was always to come to digitize big enterprises, that the decision-making cycle take usually a hell of time. Now COVID hits, then everyone wants to be digital tomorrow. And that's where I think it was really a blessing for us to digitize big businesses in different parts of the world.
Amazing. It's amazing how some of these worst enemies can be friends to a few. And look, you have my sympathies, man. But now we're all out of it. Mohammad, you were not only capturing parts of this certain peaks in demand, you were actually building your product, you were putting it out there, selling it, trying to attract customers in the middle of all of this. Tell me, how was it getting customers onboarded, catering to that demand, and building simultaneously?
For those who do not know, Auto was actually built or was founded late 2019, and we kicked out our operations in 2020. We actually signed with the first client 1 week before the pandemic and before the lockdown in Saudi. As Hassan mentioned, I think the logistics industry were positively impacted by COVID. But for us, we were thinking as a startup. Again, you're building the technology, you're building a new solution, and you need really to fix a problem. And this is what really differentiates a startup from any typical business, right? We're not just looking at the economic opportunity, but we're looking also at the problem, the actual problem we're solving. I think one of the stories that we were really proud to implement during COVID is that a lot of the brands, they were heavily impacted by COVID, right? And one of the brands that we signed up with before the pandemic was actually a homeware and a home cook brand in Saudi. And when people stayed at home, the demand on them increased by 30x. Yeah? So they had a lot of orders coming, and unfortunately, with the surge in the supply chain, many of the shipping companies failed to deliver these orders on time. So imagine the situation. You are a retailer, all of your physical stores are closed, your employees are staying home, right? And you are receiving a lot of orders online that you cannot deliver with the typical shipping companies. So what we did with Auto is basically we completely transformed the whole strategy for this retailer. So what we did was something really interesting. We converted all the physical stores that they had into fulfillment centers, right? So they had to keep one employee in each of these physical stores to do the fulfillment. And then we converted their drivers, their employees staying at home into actually drivers to deliver these orders from the nearest branch to the customer. Yeah? And then we started automating the whole process into how to receive this order, dispatch it either from the nearest branch or from the warehouse, and then whether you should ship it with your own employee or you should ship it with the other smaller companies, because the smaller shipping companies or logistics companies were capable of handling more capacity than the big ones like Aramex, DHL, or FedEx. And with that, we have succeeded in the middle of the pandemic to help these brands to deliver their orders in 2 hours instead of the typical waiting time during the pandemic, which was between 4 to 6 weeks on average to deliver one single shipment.
So you're saying it's been a trigger for better efficiencies and lesser ETAs?
Definitely.
Wow.
So we were actually saving brands. We were actually even keeping people in jobs. Many of these brands, unfortunately, they had to let go of many employees in order to reduce their operational cost and their payroll check. So, but with this, we managed to keep everyone, right? The customers, they're happy, the brands are sustainable, the employees are making money even in the middle of the pandemic, and the stock is moving, which was very important for these retailers.
That's some terrific insights. Hassan, while I was listening to Mohammad, I could not help but ignore the fact that so much of success of logistics startups is tied in with the success of e-commerce startups. The more they sell, the more you ship. At any point of time, do you think about de-risking yourself from e-commerce in general? And is there an opportunity for last mile logistic providers to backward integrate into an ordering platform, for example? The reason why I'm asking you that question is because Affirm, which is a large buy now, pay later startup, or not startup anymore, by the way, they recently announced an e-commerce ordering platform because they said they wanted a share of that pie. Is that something that you think about?
Yeah, definitely. I think what's unique about our thesis, since day one, we started the story to create efficiency and utilization. So if you look out at our platform, we bring different vertical of businesses that has a different delivery time to utilize the same existing capacity. So when you see, let's say, in F&B, the sensitivity or like the delivery time usually at lunch and dinner. These guys, they are extremely busy, but they cannot utilize the time of the driver. That's where you see most of the aggregator, they're becoming a super app just from a logistic point of view. They want to make sure that their logistic or the unit economics of the logistic not broken. So our thesis was from day one to build that platform where we bring different verticals that has different sensitivity of delivery time. And that's where the driver, they can make really more money because we're an asset light. We don't own the driver. We want the driver to make more money, and the cost per order will be totally different. So the way we look at all verticals, we look equally at them. I think if you look at the food, the F&B, and what aggregator, cloud kitchen, delivery, what's going on, is definitely insane, the growth. E-commerce is slightly specific for schedule order. So you have the chance to create that utilization factor by default. So, but again, just to answer your question in short, what we did that integration with the whole ecosystem, from ordering platform to order management to fintech. And then we built our own ordering platform later on to help players to be online where they can migrate businesses to their own digital assets. And it's growing exponentially. We launched that like 18 months ago. Now we are in 9 countries. India, we're bidding on India big time. We have a big plan. We are already in 5 cities in India, and the plan is to go full-fledged in India within the coming 6 to 9 months.
That's a very interesting answer because I put that question out there, not expecting that at all. So good luck, especially with India. I'm sure you'll have a lot of fun there. Mohammad, I want to put that question to you as well because I think identical to Hassan, a lot of your success is tied into the success of e-commerce plus. Do you think about diversifying? Do you think about de-risking, especially because you're at such an early stage?
Yeah, definitely. I mean, when we look at today, the retail industry in the MENA region, I mean, it's growing, but we have seen a lot of retailers now, they're moving towards e-commerce, right? But people, they think it's just easy to do e-commerce, right? You place an order online and then that's it. You would expect someone just to prepare the package for you and ship it to you with the shipping company. But that's not the case, actually. Once you place an order, there is a lot of manual processes on the back end that results on this delay on receiving a shipment. Going back into the question of why you order a pizza and then why when you order a product on the retail, why it takes much time. And this is where we noticed that we haven't seen a lot of investments in logistics technologies in the region or even globally. It's still, by the way, picking up. For example, one of the things that we are adding value to the businesses, for example, in auto, is that once you receive an order, how can you move the stock between your different hubs and warehouses in order to make sure that the product is available at the nearest location to the customer, right? And this can come in a form of services like a click and collect. If I would like to order something online, but I would like to pick it up from the nearest store, how can I move this item from the centralized warehouse into the nearest physical store, for example? How can I, for example, start even manage my orders differently? Let's say you are ordering from marketplaces where you might order an iPhone and then maybe you want to order a desk for your kid, right? So you can get your iPhone maybe within 1 hour and then you can get the desk shipped with one of these shipping companies for heavy and bulky the next day. So managing all of that is very important to be tech-enabled, to have the visibility, to also let and keep the customer engaged and informed about their shipments. And this is where we're seeing that even now we're looking at the segment of how can we enable even the physical stores, the offline sales, to be able also to ship and to deliver without the need of having an e-commerce presence, right?
Yeah.
And how can we enable through logistics the new concept of headless commerce in the region?
No, I think more and more players actually on the logistics as well as on the fintech side are looking at the offline play. My final question to the panel here is something that I sourced from the social media, and I put the panel out there, and I got somewhere around 88 queries. The most common theme was, especially given the panel that we have today, was environment related. Gaurav, you're moving these long-haul trucks day in, day out. I don't know, you said something like 12,000 trips a day. Where do you think this is going to lead us to? And if at all, do you have in mind an era or a phased-out strategy where you expect electric vehicles, long-haul electric vehicles to be out there and be adopted in a large-scale manner?
Yeah, no, sure. Yeah, we move a lot of gas guzzlers. Right? So an average truck that moves on the platform that does about 2.5 kilometers for a liter of diesel. So, no, and this is a well-known fact. I think one of the things about long-haul trucking is also, is most parts of the world is among the three largest economies. It's the construction, agriculture, and then trucking. And if you see all of these, especially agriculture and trucking, are also creators of these, the entrepreneur. If you haven't inherited money, you haven't gone to school, the fastest way to become an entrepreneur is buy a truck and become your own venture. So a lot of these, because they are so fragmented, one of the things that they suffer from is lack of efficiency. And this is where in trucking, a lot of people say it's high, the environmental impact is high, there are less margins. Those are not true. For example, one of the core business objectives or the core business objective of our business is to improve revenue per, running mile. So reduce empty kilometers. When a truck is going from, say, Dubai to Jeddah or Dubai to Amman, in the platform, there is, demand generated at Jeddah and Amman as well, that the guy is not coming back empty, he's coming back with a load. And those are also the most profitable lanes for us when we are able to quickly connect demand and supply. And that's where the entire technology investment is in building in that network, where I find the most efficient and frictionless way of connecting that demand and supply. Because, the coming back empty from Jeddah to Dubai is a huge environmental impact. You're burning the diesel, but you're not really making revenue. So that goes without saying, so we're reducing a lot of empty miles. Right now, the metric is around 42% as of end of October, as 42% of our reverse cargo is from the platform. And then, we are a product, there's a very small R&D team that is looking at, the infrastructure that will be required for electric vehicles. I think electric vehicles for trucking, and especially long-haul trucking, will have to be slightly different than cars. Those guys can't go into a mall or into a predestined, charging station and wait for 5 hours or 3 hours to get charged. A different kind of infrastructure, which a few other global startups are working on, and we're part of our R&D, network, where, we're looking at infrastructure that will have battery replacement centers. You stop, you give out your old battery, fix the new battery, and this will require, a few months, but it's coming quite soon. We are definitely thinking of pioneering those kind of things in our, core markets and then scale it up. And the third thing I think for us is also looking at asset quality. The Middle East suffers a lot from poor asset quality. Again, that's because of the fragmentation. A typical driver makes enough money to buy a 5-year-old truck, but he buys a 10, 12-year-old truck because he has to save up to buy that truck. Now, he does not have a credit score, he does not have, access to, financing, so that financial inclusion is quite poor. Those are other things that we're looking at doing. So,
awesome.
So all of those things combined, I think, there's an impact.
Well, let's just hope for more Rivians and more Teslas on the streets. Gentlemen, that's all we have time for. Thank you for the wonderful audience as well for listening to us so patiently. Over to Omar. Thank you, everyone.
Thank you.
Thank you.